Hey there, welcome to LoonieMoose. It's great to see you here. Today, we're going to dive into the world of personal finance foundation and talk about saving and investing. Some of us may think they're the same, but they kinda have fundamental differences in many ways. Understanding them will help us avoid unnecessary disappointments in the future. Without further ado, let's get started. First, let's talk about saving. When you save money, you're essentially setting it aside for future use. This is typically done in low-risk accounts such as savings accounts or a fixed deposit. Saving is a crucial part of financial planning because it helps you build an emergency fund, achieve short-term goals like a vacation, or simply maintain financial stability. Now let's move on to investing. When you invest, you put your money to work to earn a higher return. This is usually done in higher-risk accounts such as stocks, mutual funds, or real estate. Investing is essential for achieving long-term goals like retirement or building wealth. So what's the difference between saving and investing? The biggest distinction lies in the risk and returns that we have to face. We can't have it all after all. When you save, you place your money in a low-risk account, so you're unlikely to lose your principal. However, the interest you earn on your savings is also relatively low. On the other hand, when you invest, there is a higher risk of losing some or all of your principal, but the potential returns are much higher. Now, do we have to choose between these options? Well, not really. It's better to have both actually. Let me show an example. Imagine we have $10,000 to invest, and we want to achieve a specific goal in 5 years. So if we put that money in a savings account that pays 1% interest per year, we would have $10,510 after 5 years. That's pretty good. However, if you invested that same $10,000 in a diversified portfolio of stocks that typically earns an average of 7% per year, we would have $14,025 after 5 years. Whoa! This might make us think that investing is the better option, right? Well, yes, as long as we can tolerate the ups and downs of the stock market. Let's not forget how most stocks tumbled by nearly half of their value during the COVID-19 lockdown period, which means people also seeing their invested money in those stocks reduced into half of the initial amount. Now imagine if the money we invested was our emergency fund, meant to help our household navigate through that difficult time. And we have to take out that investment when we're at the depth of market downturn. That doesn't sound pretty at all. But also imagine if it turns out we don't use that money in all those 5 years. We obviously want to have 14,000s instead of 10,000s, aren't we? So what's the solution? Let's just split our extra money into both savings and investing accounts based on our goals. It's always good to prepare for both short and long-term needs anyway. Here are a few simple cues that might help. For keeping emergency funds, saving up for a house down payment, covering vacation costs, saving up for buying a new car, and for every other need that has to be fulfilled in less than a few years, keep it safe in savings. By the way, setting up for emergency fund is pretty important. If you have time, please check out another LoonieMoose video on how to structure our emergency funds and determine how much is enough. Now for investing, we tend to look far into the future. Think of retirement funds, preparing college tuition for the kids while they're still in their early elementary grades, building wealth for an inheritance, or simply setting aside unused money. Well, I wish I have some unused money too, but anyway, thanks for sticking around so far. Understanding the difference between saving and investing is crucial for achieving our financial goals. For a bonus fact, do you know that around 40% of Americans has no saving? And almost half of the millennials live paycheck to paycheck. We should really pat our back when we have some money in our saving account, do we? Again, thanks for tuning in, and I'll see us in the next videos when we will dive deeper into saving and investing alternatives. See you then.